What's the recommended price there?
Welcome, Leeb Group viewers. Today's Wednesday, September 16th. Well, there was plenty of action in the disjointed markets again today. Fed Chairman Ben Bernanke joined the chorus yesterday saying that the recession is over, although he does acknowledge the recovery will be slow. And technically, the economy is out of recession, but Big Ben has a lousy forecasting record, and we'd be in no hurry to race into stocks on his say-so. Absent government spending, the economy would be firmly back in recession territory right now. And the government is quickly running out of funds if it's to avoid exceeding its debt ceiling limits. Bernanke's all's well call really is laughable when we see Treasury bills slipping to just 10 basis points, 10-year Treasury bonds, meanwhile, at less than 3.5%, and 30-year paper at 4.25%. That all tells us that conditions are far from normal these days. The dollar has slipped to a 12-month low, and commodities continue to march higher, including a record close on the price of gold today. But none of that has deterred equity investors who took comfort in today's industrial production and capacity utilization figures. Both those numbers were higher than expectations, which was all stock buyers needed. Never mind the fact that the raw numbers are still only slightly above record lows. By the closing bell today, stocks were up by a hearty margin. 1% gain on the Dow Industrials, 1.5% on the S&P 500, approximately 2% on the Russell 2000 index of small cap stocks. Value trounced growth, junk bested quality, and volume was again eerily absent. The S&P 500 is now up more than 60% from its lows. That's 60% without so much as a 7% correction. And the really scary thing is that from purely a chart-watching perspective, there's little to prevent stocks from moving even higher. But while the technicals are the only thing that matter to this market now, at some point we're going to return to fundamentals. And when we do, this ethereal market is going to morph from something like a pleasant dream today to a nightmare in a hurry. That's all for now. Thanks for stopping by.